driving that economic optimism that's boosting groups like industrials to the top and Treasury yields to 5-month highs?
Yeah, Sarah, good to be with you guys again. So one of the things that we're really focusing on are the signal that's coming from financial conditions. What are financial conditions? Financial conditions are things like, corporate credit spreads or interest rates, but also volatility, Sarah. So I think what the market has been saying this week, especially yesterday's rally and today, is that if you can remove this giant uncertainty that the world has been waiting for since November 3rd, that introduces another tailwind to financial conditions. And I think 10-year Treasury rates, and Michael mentioned this, 10-year Treasury rates are basically at the highest level that we've seen post the March period. And that's telling us that there is no boogeyman in the bond market. There is no real sinister message coming from fixed income. And moreover, it's one where we see this continued expansion happening along with eventual fiscal policy that keeps rates up at these levels. So we are very pleased to see 10-year Treasury rates close to 90 basis points right now. That's additive to our view.
What level of rates, Phil, starts to hurt certain sectors because of their valuations? And are you worried about that occurring?
Yeah, Wilfred, that's a great question. And I the last cycle we had to answer this as well, because every time rates were buttoning up against 3%, which looks like another universe from here, we were getting that question. And Wilfred, it's all about the speed that rates move higher. That's what's really disconcerting. So if we see what we've seen over the past couple of weeks, which is just kind of a grind higher in rates, that's a good signal. So there is no one single rate that the economy can't withstand. A lot of people are talking about 1% as a possible top of the range. Wilfred, I'm not sure if I necessarily agree with that. We would be more concerned if rates just unhinged on the back end and caused a tightening in the financial conditions very quickly, similar to something like the taper tantrum, right? And that's not our base case in this economy post-election.
Shepard Smith here. Thanks for watching CNBC on YouTube.